Welcome back to the Burr Investor Podcast, where our mission is to empower aspiring real estate investors in their journey towards building generational wealth. All right, we're here today. We're going to talk about a very, very fun, or maybe not so fun topic for everybody. It's reverse mortgages. It's a topic that, many people are completely unfamiliar with. Some have just a little bit of information on. But from the conversations that I have, it's definitely widely misunderstood. So we have an expert in the space here to help demystify and bring some clarity on the topic of reverse mortgages. So welcome, Janice Cohen. Thank you so
Thank
much for being
you.
here.
Thank you so much, Alex. It's lovely to be here. And I appreciate your inviting me here to have a conversation about reverse mortgages.
Absolutely. I mean, I think it's something that, again, we don't really hear too much of, and I've experienced it a few times in my career. Again, it's not something very common. It depends on your clientele base and so forth. But it's something that I feel is important to, shed some light on. This is what this community is all about: is just to be a resource, provide information, educate our listeners and viewers, in hopes if somebody, needs something specific, they can, reach out to someone like yourself, which, you're obviously, this is your expertise. So this is like a niche, and I feel, working with somebody that knows what they're doing is very, very crucial. So with that said, can you please share a little bit about Janice, about your background, and then we'll dive into the conversation.
Sure. So I am a relative newcomer to California. I've lived here for 15 years. I moved here from New Jersey. Before I began in reverse mortgages 20 years ago,
Okay.
I had no experience in mortgages. What I like to tell people is that the only thing I knew about mortgages 20 years ago was that I had one. And
I like that.
so you can imagine, when people ask me questions to this day about, hey, if I'm looking to buy a house and I want to get a mortgage, and I'm like, I don't do that kind of mortgage. I know nothing about that kind of mortgage, but what I do know is how to kind of hold a senior's hand through the process of reverse mortgage and kind of relieve a little bit of financial pressure for them. So before I did reverse mortgages, I was a teacher in my children's school. And then they went on to a different school, they graduated to high school. And then I thought, this isn't as fun anymore. I want to do something more challenging. And, I was a little tired of being a teacher. There, the burnout is real. My next door neighbor was working for Wells Fargo at the time, and his son used to babysit for my two young children. And he said, Janice, they've opened up a new division in the Wells Fargo office, and it's reverse mortgages, and you're a teacher, so you would probably be really good at explaining this program because it requires explanation, patience, hand holding. And I said, I've got all of that. I can do that. I just need to learn how this works. And I did. And it took a little while, of course, with any kind of skill, it takes a while before you really feel like an expert. But now, since I moved to California 15 years ago, we moved, my husband and I moved because of his career. He was in the entertainment industry. He retired a couple of years ago. But since we moved here, I have been absolutely blown away by the power of a reverse mortgage because when I was in New Jersey, the average home price was maybe 350,000, 400,000. And while it could be life-changing for someone in certain situations, there's no comparison to how life-changing the reverse mortgage is here in Southern California because the home values are so high. Not only that, the cost of care in California is so high, whereas the employment laws in New Jersey are very different. People can get away with hiring someone privately, paying them a little bit, minimum wage, whatever the case. Here in California, you can't hire somebody privately and be safe from a potential wage and hour lawsuit.
Mm,
You almost have to go through an agency. You have to know what you're doing. So it's been very eye-opening to kind of get to see behind the curtain of senior care. It's been very enriching for me and very satisfying to be able to really, truly get people to a comfortable place in their lives, having their needs met by this program.
wow. It's awesome how you mentioned, like, being a teacher really contributed to your success in this field because yeah, it does require a lot of hand holding, patience, knowing how to get the point across and explaining it, breaking it down to, to the person's level of understanding, right? Because it's foreign to many people. It's like, you're speaking a different language and also, caring.
Yes.
And those are all characteristics I can, tell from you just by, talking to you. So that is very, very cool. You're a perfect fit for the job, it seems like.
If I had only known, in fact, when I went for my interview with Wells Fargo, Jim Gallagher, may he rest in peace, was the manager who interviewed me. He wanted to make me an offer on the spot, and I thought, he's crazy. He has no idea what I don't know. But he saw something in me and he said, "This is for you."
Wow.
And I said, I don't know. And I remember going home. I like burst into tears. My husband's like, "Why are you crying? You got a great job offer." And I'm like, "I don't know. I don't know if I can do it." He's like, "You can do it." And here I am, 20 years later. I've been doing
Wow.
it.
Wow. He truly saw something in you.
Mhm.
I wanted to transition back. You mentioned, again, hand holding, elderly, but also I'm sure, that involves the family members too. They don't know and they want to know and how it works afterwards and so forth. So, with that said, let's go to, the basics. Let's define what is a reverse mortgage for those that have never heard of it.
Okay, so a reverse mortgage is a program that is available to people 55 and over. Used to be 62 and over, but nowadays we have a special program for younger people with high value homes. So now it's 55 and over, and it allows them to borrow a portion of the equity that they have in their homes, a portion of their home value they can borrow, and they can use that. It's, by the way, it's tax-free money for them because they've already paid taxes on it. Because we don't call this income, we call it return of principal or
Got it.
return of equity. So it allows them to take this money and to use it for whatever purpose they need or want to have this reverse mortgage income for. They can take it in the form of monthly income. They can take it in the form of a lump sum, or they can take it just in a line of credit. And when people come to me, I kind of help them decide what would be the best application for them. It's very, very rarely a lump sum. First of all, this is a loan where there are traditionally people are not making payments on this loan.
Okay.
The loan is a negatively amortizing loan, which used to be a bad thing. And it is a negatively amortizing loan. So what you're dealing with is a growing loan balance. I always tell my clients, take out the very minimum that you absolutely need. We want to treat this money like it's the last money you'll ever have because sometimes it is. So let's say, for instance, a couple owns a house valued at $1 million. And let's say we're able to lend them $500,000. And let's say they have no mortgage at all. If we lend them that $500,000, that line of credit is not going to be charged interest. They can take what they need when they need it. Let's say, for instance, they really just want an emergency fund. And let's say their car dies and now they're without a car. They want to take out $35,000 from the reverse mortgage line of credit. They can use that money to buy a car and they have no payments that are required. Now, you may say, well, why wouldn't a person just do a home equity line of credit from Chase or Wells Fargo or Bank of America like you or I would? Well, I'm 62, so I'm in a different situation. You are younger. Keep in mind, the people who come to me, they are not in their highest earning years of their careers if they're still working. Some are working, some are only working part-time. Some were told by their company that they have to retire or they're being retired. Not everyone who retires does it because that is their dream and they're ready and they want to finish working. Some people, yes, some people, no. Some people think, I want to work until my dying breath. Everyone is different. But what is unique and helpful about the reverse mortgage program is that we do not place the same emphasis on income to qualify
Yeah.
that someone in the traditional mortgage industry would. Now, someone who's going to qualify for a traditional mortgage has more options if they are willing to make monthly payments.
Got it.
For my clients, the vast majority say to me, look, I'm trying to get out of making payments on things at this point. I just want to be able to keep all of my Social Security income and be able to use it to go out to dinner with my friends or go to the movies or drive to the Central Coast to see my family. Everyone has a different objective,
Mm.
but one thing is for sure, many of them are retired either through their choice or their company's choice, and they want to have an emergency fund that they may not have. Somebody comes to me and they live in LA and they're in their 60s and they say, I've got a couple of $100,000 put away for retirement. Is that really going to get them to where they need to be for the next 20, 30 years? $200,000 in a retirement account? Not likely. Opening up a reverse mortgage line of credit is magic because they made a great decision 40 years ago, 30 years ago when they bought their home, wherever they bought it. LA real estate is something you can bank on. And if you own a home, you have a bank account in that home, as long as you're able to access the equity. So it's very interesting how powerful it is and how many people they just want to sleep well at night. It's not even like, I'm going to take the money and I'm going to start a company. No, no, no. People say, I just want to sleep at night and not worry about money. And the beautiful thing about a reverse mortgage line of credit is that whatever money is left in the line grows each year at the same rate that borrowed money is charged interest. So let's say that couple with the $1 million house is going to take out a line of credit for $500,000. In 10 years, that line of credit, because of the growth of the line of credit, is going to be a $1 million line of credit.
Mm.
Not for any reason other than they're getting older.
Mm.
Because with a reverse mortgage, the older you are, the more money you can borrow from your home.
Yeah. And the more money you need. I mean, you mentioned it. That's a great point. I didn't think about it. Is like two main things. Is one, either your income decreases typically, right, or you become unemployed, so you have no means of getting traditional financing, right? You can't get a loan, HELOC, a refinance, cash out, any of that. And
Right.
then the other point, which is a great point, Again, it's all relative to where you are in life and how you look at it, right? Everybody can make their own comment about something, whether it's good or bad. But unless you're in a specific situation, you may not realize. But not having to make payments is a big deal
Huge.
at an older age because you have a lot of expenses to account for. So,
And especially a lot of my clients, I have two most commonly found scenarios for my clients.
okay.
Most common, number one, they have a house that they paid $100,000 for in the 1970s. It's now worth $2 million. dollars. Now, in other parts of the country, people watching this will say, what? A house that was once worth 100,000 is now worth 2 million. Come on.
I've seen it.
You and I know that happens all the time.
Yeah.
Alex, you and I know that if a married couple who owns that home sells that home, they're going to have an enormous long-term capital gains tax bill
Mm,
that they're not going to want to have the burden of having to pay Uncle Sam all this money because they sold their home to move to Belmont Village. It makes a lot more sense for them if one of them needs care or both of them need care, get care in the home, use the reverse mortgage to pay for that care. And then when one of them passes away, which ultimately happens in all marriages, the survivor will get a step up in basis upon death. So they will not have any long-term capital gains tax burden if they want to sell the home after their spouse passes away. And that is what a lot of my clients do. That is a very common scenario. They need care in the home. If they sell, they have a long-term capital gains tax bill. They do the reverse. They pay for care until spouse passes away, and then they can sell the house with no long-term capital gains taxes because they're getting the step up in basis upon death. The second most common borrower of mine is a younger person who says to me, I made some really bad investment choices. I gave away too much money and I can't find a job. And as mentioned before, I have $200,000 in my retirement account at this point. I have a home in Venice and my taxes are low, but my lifestyle is expensive. I don't want to live like a hermit and live only on Social Security.
hmm
That is the person for whom we open a line of credit and then peace of mind. And I say, look, continue to be frugal, continue to try to survive on Social Security. But when the car dies, when you need to put a new roof on the house, all of these things, you can use the reverse mortgage line of credit to do it.
Yeah, it's there. So is it always a line of credit or is it typically like, also dispersed completely to like in the case of the client, $1 million, they got 500,000. Do they get 500,000 into their bank account or is it just use it as you use it, you pay for it?
As you use it, you pay for it. And the reason I like to tell people to do that is because any money that's in the line of credit is not going to be charged interest. There's no interest accruing on money that has not yet been taken out. That's why if someone doesn't need a lump sum of cash for some reason, don't take out that lump sum of
Mhm.
cash. Simply use what you need when you need it. Keep that reverse mortgage balance as low as you can so that the interest that you're going to be charged will be minimal. And you will get a monthly statement in the mail. You'll always see where you stand. What is your loan balance? What is your line of credit balance? And take out only what you need when you need it. But by the same token, I had several calls yesterday with a private professional fiduciary who's trying to calculate how long she'll be able to keep her client at home. He needs care in the home. He does not want to leave the home. Care is about $10,000 a month. And that's only because he has several family members who are pitching in.
Mm.
So otherwise it would be 30,000 a month. So he has one child who's sleeping in the house at night. He has another child who's coming during the day. And then they have respite care during a period of time when the children are not available. So for someone like him, we went through a scenario where we looked at how long would $10,000 a month last him? And we had our conversation based on the monthly draw and the longevity of that monthly draw. So it's kind of like a financial planning tool
Mm. Yeah.
in addition to being a real estate tool.
It requires a lot of strategy and thoughtfulness, right? You have to know that person's situation. And a lot of people are going to rely on you to guide them because they're in either a health or a situation that they may not be able to, break it down. Or so someone like you is really, really crucial and helpful in this situation.
Yeah.
Have you noticed any like any time where someone came to you and you've noticed like, the reverse mortgage may not be their best option?
Very often if someone comes to me and they have a multi-generational home, and they say, the most important thing for me is being able to leave this house to my children, both of whom live in the home with their children. Then I say, you don't want to do a reverse mortgage on your home because then when something happens to you, your family will have to figure out alternatives. If they're okay all living together indefinitely, and that's great, then maybe a reverse mortgage is not the right solution for you. If your children are living in the home and if they're working and they can make payments, maybe you can figure out a way that their income could help you qualify for a mortgage upon which you would make monthly payments. That's usually the situation. I received a call a couple of days ago from someone who said, I bought this house, I began a gut renovation, and I've run out of money. There is no kitchen, there is no bathroom. And then I have to say, you need a construction loan. I can't
Mm.
help with that. We follow FHA guidelines. So when we lend money, we do a full appraisal on the house, everything from turning on the sink to make sure the water is flowing, everything from checking smoke detectors, carbon monoxide detectors, hot water heater has to be double strapped unless it's a tankless. So we need everything to have the health and safety standards that any FHA loan would require. So that's another one. I wish I could do a construction reverse mortgage, but no can do.
Wow. That's pretty cool. Yeah, I was thinking about that too, and I'm glad you brought it up. So in a case where, somebody does pass away, so what happens there? And then, if there are heirs, they're inheriting the property, what do they do? Like,
So if someone passes away, and they're getting ready to list the house for sale, number one, and this all happens way before a reverse mortgage, way before anything, we hope and pray that the house is in a trust.
of course,
We
very
want
true.
the house, we want to see that the house is in a trust. Somebody comes to me and says, we want to do a reverse mortgage. The first question I ask is, let me see the trust, please. If they say, oh, we don't have a trust, I say, well, why don't you contact an attorney and begin crystallizing your wishes and let's close the loan in the trust. So as soon as during the 4 weeks or so that it takes to process their loan, they're talking with a trust and estate attorney who will then submit the trust. And when we close on our loan, we can make sure that the house is put into the trust. When someone dies, if the house is not in a trust, it's going to go through probate. And that's an awful thing for a reverse mortgage because when someone passes away, that is considered a due and payable event. It's a default event. When you have a default event, there is the expectation that the loan will be paid within 6 months. either through the sale of the house, a refinance of or refinance out of the reverse mortgage. It is up to the survivors to kind of deal with that. If they are, if the house is going through probate, probate can take longer than 6 months. And then what do? They're going to get letters from the reverse mortgage company saying, hey, we're coming up on 6 months. So the good news is that they can apply for two 90-day extensions after that 6 month period is up. So really, if they are going through probate, they will have up to a year to get the house sold and to get the estate wrapped up. But it is so much easier for us to do our jobs at the other end of this loan when the house is in a trust. I would say what needs to happen is within about 6 months, the house needs to be sold or the loan has to be paid off in a different way. And that's what needs to happen.
Have you had like resistance, someone not wanting to put it in a trust, for example, for any reason?
Not really I mean, I've heard some lame excuses, just like you've heard, oh, a trust is so expensive. If you even want to get like, if you don't care about the quality of the trust that you're getting,
Yeah,
then you could always call one of these 800 numbers and just talk to a doc preparer and
sure.
they'll create like a dirt cheap trust for you. And it may not be a really useful trust, but maybe you take the money from the reverse mortgage and you upgrade into a decent trust from
Yeah.
there. So it is a little tricky. I don't usually get too much pushback, but people procrastinate, Alex. They're like, I'll do it, I'll get to it. And then,
Yeah.
it's like, hey, did you do your trust yet? Oh, I'm still interviewing lawyers. It's like, make a decision. Decision paralysis is a real thing.
Yeah. And having a trust, I mean, we can talk about this for days, and share like all these sad stories. Having a trust is crucial. We have a great estate attorney in our community. She was on Angela Barbarian. She also shared a lot
Oh,
of
I
good
know her very
information.
well.
Oh yeah, she's
Hmm.
awesome.
Yeah.
And yeah, it's just very, very important and how it ties, with what you do, it ties with what I do, right? It's a extra layer of protection. And then, touching on calling that 800 number and stuff, it's just like getting, cheap insurance or some you're paying for something that really ends up not doing its job when you need it. Like why pay for it, right? So I'm a big believer in getting it done correctly. So with that said, for someone listening who may have parents or relatives that could benefit from this, what advice would you give them before they explore reverse mortgage?
Sometimes it's an interesting question that you're asking. Sometimes here's a funny scenario having to do with the kids. I had a call last year from the wealthiest child in the family. He was a physician, and he said, I've been giving my mother $5,000 a month for 5 years. He said, my younger brother lives in his teenage bedroom in my mother's house. And you and I know people like this. My sister, God bless her, she is a homemaker. She's raising 3 kids. Her husband works hard, but they don't have a ton of money. So the responsibility has fallen to me to send my mother this money every month to pay for her care. So he said, I really need things to be equitable between the 3 kids now. He said, I'm not asking for any of the money to be reimbursed to me. He said, but going forward, he said, I'm getting ready to retire and I want to have that $5,000 a month to do whatever I want. He said, I will make sure my mother's needs are met, but I'm tired of funding my siblings' inheritance. He said, when my mom passes away, the 3 of us are going to inherit the house equally. But I have been giving my mother all of this money for 5 years. I'll never see that money again, and that's okay. but going forward, I'm funding their inheritance and I don't want to do it anymore.
Mm.
So that's something, kids can collaborate with one another and say, okay, we're each going to chip in 2,500 a month, 5,000 a month. We're going to make sure mom's covered for anything she might need. And that's lovely. That's great. But not every kid in the family might be in a position to actually execute, especially the son who's living in his teenage bedroom, who's in his bathrobe at 2 in the afternoon when I go over to the house to meet with mom. And there's a man standing in her kitchen in a bathrobe. And I say, oh, who's that? She said, oh, that's David. Oh, who's David? Oh, David is my son. Oh, hi, David. Like, wow. Okay. Family dynamics are very interesting,
Yeah.
as you well know.
You probably have some very, very cool stories. Oh my God, that's awesome.
Yes.
So, I would highly recommend those of you that are watching or listening, if you're curious, if you think this is something that you might want to learn more about, it might be helpful for you or for someone please don't hesitate. Reach out to Janice. She's an amazing resource. She's a great part of the community, and she will be at our event in Pasadena in person in April. So if you're in the area, please check her out. So definitely reach out to Janice. Janice, what's the best way for someone to reach you? Phone, email, website? What do you prefer?
Call me 888-740-9573. I am a reverse mortgage specialist with Mutual of Omaha. So you can find me on the Mutual of Omaha website, but you can email me. You can call me. Call me. That's usually the best way. Happy
Perfect.
to have a conversation.
That is awesome. Thank you so very much. We'll definitely put that information, the contact information down below as well for you guys. Janice, thank you so much for taking the time to be here. Thank you for everything you do for everyone out there and for being of service. So appreciate you very much.
Thank you, Alex. And I will see you in a couple of weeks. And I'm so grateful for this invitation.
Thank you all for joining us on the Burr Investor Podcast. If you found today's episode helpful, please hit like and subscribe to our channel for more real estate insights. We love hearing from you, so please leave your thoughts, questions, or topics you'd like us to cover in the comments section below. Be sure to check out our website, theburrinvestor.com, and follow us on social media at The Burr Investor. Keep learning and investing, and we'll see you in the next episode. I'm your host, Alex Nahle. Stay invested.